Hello, I'm Trang. This is Christian and Arena. Today in our market view presentation, we will be looking at two pairs of currency, which is AUD USD and AUD JPY. First, let's start with AUD and USD. As you can see on this chart from Bloomberg, currently one Australian dollar is trading at 0.7532 US dollars. The Australian dollars has fluctuated between 0.6827 and 0.7835 in the last 12 months. Now we will be looking at the three major indicators that impact on the exchange rate, which is inflation rate, interest rate, and commodity price. First, we'll be starting at inflation rate.
Australia's inflation rates are currently higher than the United States, sitting at 1%, with the United States inflation rate sitting at 0.8%. The high inflation rates will lead to a decrease in demand for exports and an increase in demand for supply. As shown in the graph, the supply line will shift to the right, whereas demand will shift to the left, thus causing the AUD to depreciate against the USD.
Next, we'll be looking at the interest rate between Australia and America. According to the Reserve Bank of Australia, in its meeting on August 2016, all the board members have decided to cut the interest rate in Australia to a record low of 1.5% to boost the economic growth, and the rate has remained unchanged since then. However, in America, the interest rate haven't seen too much changes since the financial crisis in 2008. The interest rate have been changing from 0.25 to 0.5 in the last 8 years. The fact that the inflation rate and interest rate in Australia are higher than those in America, which lead to a increase in import and decrease in export, which will result in a shift on a supply curve on the right and the decrease in demand in Australian dollars. This will decrease the exchange rate and make the Australian dollar depreciate against the American dollars.
As discussed, relative interest rates and relative inflation rates both play an essential part in strengthening the value of a nation's currency. Similarly, commodity prices also play a vital role in strengthening a nation's economy. Australia's commodity market centres around our natural resources, particularly our minerals. The Reserve Bank of Australia's bulletin, published in April 2016, states that 55.4% of our commodity market revolves around iron ore at 33.9% and coal at 20.5%. Other noteworthy commodities include liquefied natural gas at 8.8% and gold at 7.1%. What this information shows us is that our commodity market reflects the success of our minerals and the relative importance they have to our economy. The export of commodities accounts for roughly 19.8% of Australia's GDP, as stated by the World Bank. Comparing the USD to the Australian dollar, it is our opinion that from commodity demand, the Australian dollar would prove stronger in the face of US dollars in the coming months. This is reflected in the considerable spike in demand of Australian commodities in the United States. Australia's Trade in Goods and Services report in 2015 stated that growth in the 2014 to 2015 period increased by 19.3%. This increase in demand shows promising signs for Australia.
Based on all the indicators previously stated, it is predicted that in 3 months' time,
Next, we'll be looking at the second pair of currency, which is Australian dollar and Japanese yen. As you can see on the chart here, currently one Australian dollars is trading at 76.931 Japanese yen. The Australian dollars have seen a lot of fluctuation between the year, with the lowest of 72.533 and the highest of 90.728.
Inflation between Australia and Japan are similar to that of the United States, with Australia having a higher inflation rate of 1% and Japan having a lower inflation rate of negative 0.1%. As a result, the AUD will depreciate against the JPY. As there will be less demand for exports and increasing demands for imports, goods will seem very expensive to foreigners, but purchases will increase among Australian citizens as foreign products will become relatively cheap, leading to the Australian dollar to depreciate.
Moving on to the interest rate in Australia and Japan. As we have discussed it before, the Australia interest rate has remained unchanged at 1.5% in September 2016. However, in Japan, after 5 years of keeping the interest rate at 0%, in early 2016, the Bank of Japan has decided to apply this negative interest rate, shipping the interest rate to minus 0.1%. The interest rate and inflation rate are both higher in Australia. Therefore, it will decrease the export and increase import in Australia, shifting the supply curve of Australian dollars to the right, and at the same time decrease the demand of Australian dollars. As a result, the exchange rate will decrease, making the Australian dollars depreciate against the Japanese yen.
Recent data from the RBA suggests that particular commodities may take a dip in the coming years as East Asian countries, including China and Japan, implement more economically conservative policies. As a result, we hold the argument that the Australian dollar will weaken against the Japanese yen. This is further supported by the fact that Australia saw a 16% decrease in exports to Japan. The consumer demand, particularly in China and Japan, has allowed Australia to prosper over the last decade. However, recent data suggests that China's economy has been slowing somewhat. Goldman Sachs states that this is due to a shift in China's economy. The country's high debt rates from both households and businesses, its large supply of unsold homes, along with an aging working population, has impacted the country's economy. The impact of the relative slowdown in the economy has resulted in a reduction in demand for both iron ore and coal, the two largest exports in Australia. This reduction in demand is reflected in the little amount of investment for new mining projects in Australia, indicating that a global decrease in demand for some of Australia's traditionally more popular commodities will have an adverse effect on our economy.
And the final forecast for the Australian dollar and the Japanese yen is that in 3 months' time, it is predicted that the Australian dollar will depreciate against the Japanese yen, trading at a rate of 0.74 Japanese yen. Thank you for listening to our presentation, and we hope you enjoyed it.
Thank you.